Good morning, good morning, good morning. Welcome to today's morning blast. It is April the 9th. It is Wednesday. As usual, myself and Mr. Michael Brown will give you all the information you need to know to jumpstart your trading day. But before we do, I will get the legals out the way. Nothing discussed in this spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ or the hosts, which, as you know by now, is myself, Ryan Paisley, and of course, Mr. Michael Brown. Good morning, Michael.
Very good morning, Ryan. Good
What
morning,
was that?
everyone.
What was that at the start
Well, it's
for?
been a slightly chaotic last 24 hours or so, hasn't it?
Oh, hasn't it just?
Yes. All fun and games, though, I suppose.
Yeah, very much so, very much
I
so.
was,
Also, I had my legs out yesterday in the sun in the city, which was nice.
oh, no wonder I saw someone being sick in the street.
Yeah. One of the senior people at CME did say that the last time he saw legs like this, they were hanging out of a nest, which I'm not
Oh,
sure. I'm not sure I'm going to recover from that, but no, it's all good fun. Yeah. But
oh,
anyway,
dearie me.
enough about my life choices. What's been happening?
Yeah, well, quite a lot has been happening, to be completely honest with you. Good morning, everyone. It was another rather chaotic and messy day yesterday, and of course, that has continued into the Asia session overnight and also into the start of the European day. I will start with the moves that we saw in the equity complex, but I think it's actually what's going on in fixed income that is of considerably more interest at this moment in time. Nevertheless, yesterday did begin with a little bit of a dead cat bounce in the equity space, with both the S&P and Nasdaq up by as much as 4% on an intraday basis, before then both ending the day deep in negative territory once more. The S&P down by 1.6% and the Nasdaq 100 down by 2%. That means that the S&P 500 is now down by just over 12% over the last week since the cash close on Liberation Day. So I think all that's been liberated thus far is everyone's capital gains. And it's also worth bearing in mind, actually, that marks, I think, the fourth trading session in a row that the S&P 500 has traded in a range of greater than 5%, and that has actually only happened. Well, that is the fourth time that has happened going back to 1982. The only other parallels are 87, 2008, and 2020, and I thank Bloomberg for that little nugget of information. As I said, though, it's the moves in the Treasury complex that are really the concerning ones, because despite equities dumping pretty much across the globe, we have seen Treasuries continuing to sell off and sell off aggressively across the curve, with yesterday's trade seeing the 10-year yield rise by about 10 basis points and the 30-year yield rise by about 13 basis points. And that sell-off continued, and effectively yields went vertical during the Asia Pacific session overnight, with the 10-year trading all the way up to a high of 4.5% and the 30-year briefly poking its head above the 5% handle, although we have seen some of those moves pare back a little bit in recent trade. As for why this is happening, I mean, I think, to be completely honest with our listeners, I am scratching my head about this as much as everyone else. There are a few potential narratives for this. I think the obvious one is that this could be a result of forced selling, basically people selling their high quality liquid assets, their treasuries, in order to raise cash. It could also be a sign of continued worries over the deficit. Of course, as we mentioned yesterday, you go into a recession with a 7% deficit, ain't going to get any better. There's also increasing sign out there that either people can't or people don't want to be holding treasuries. So, for example, swap spreads have fallen through the floor in the United States. And we also had a pretty terrible 3-year auction yesterday. Not only did we tail the when issued by a huge 2.4 basis points, which was the third largest tail that we've ever had, we also saw dealers take about 21% of that sale. Now, for those who are unfamiliar with treasury auctions, the easiest way to think about that is dealers basically get what's left after everyone else has taken what they want. And the fact that they had double the amount that they took last time out is a little bit of a concerning sign and effectively resulted in dealers
Just
backstopping that sale. Go on.
just two things to just add to this work. Just one thing to clarify for listeners who might not be aware is that when you say forced selling to raise cash, that would be forced selling to raise cash to cover margins on other
Yes,
underwater
yeah, yeah,
assets that
yeah,
they're holding.
absolutely. Yeah.
The other thing that worth noting in terms of who out there is selling. There is some rumors going around, and again, rumors, rumors, rumors. Do not trade off of rumors unless you're in it very, very early, in which case you might do all right.
Or you're
But
the one starting the rumor.
or you're the one starting the rumor. But there is rumors out there, and people trying to put two and two together and get about 28 that potentially this is um, central bank selling, as in other central banks. Such as
Yeah,
China, perhaps maybe selling treasuries to kind of then allow them to fight the yuan, and stuff like that. So obviously, just be mindful that other central banks are the biggest holders of treasuries. So if they decide just to trim them, they're going to have quite an impact, especially if they all start to do it at the same day. So yeah, so there's a lot going on, but we don't really know what is causing it. And anyone that claims to know for certain at this point, in treasuries especially, is talking out of their arse.
yeah, yeah, I agree with that. If anyone is claiming that with certainty, I'd just mute them and ignore them. To be completely honest with you, this sort of thing, I would say, just on a sort of broader level, two things. One, it's the kind of market move that becomes a little bit self-fulfilling.
Yes.
If you see the 30-year yield rise 10 basis points on a day where equities are falling off a cliff, naturally you're going to be sitting there going, "What the hell is going on?"
Yeah.
I'm going to, effectively ride that momentum and go, "Well, I don't want to be holding this either." And that kind of perpetuates the selling pressure. The other thing I would say is it's the sort of thing where 2.5 years later on, the FT run a scoop going,
Oh
"Oh,
yeah,
do you
definitely.
remember when?" And then they've got the inside track on exactly what happened. And
Yeah.
9 times out of 10, it's not what anyone thought it was at the time
Um,
anyway.
One thing to note as well, and this is more of a in general when markets are stressed like this, when markets are stressed and trading obscene ranges and stuff like that, and everything is really kind of stretched to the limit, this is when you normally find out who's not wearing any pants. Right,
Mm,
when the tide goes out, you find out who's been stood there waist deep naked, um, and it's usually at these times of massive moves and stuff and really kind of extreme markets that we find out that someone so and so has been massively over
yeah.
leveraged and therefore they go bust. So don't be shocked. In actual fact, I'm kind of almost expecting some names to be coming out over the next week or so of little firms going pop.
Mm,
Little firms going pop, not such a big deal. It's genuinely healthy for markets to kind of weed out the over leveraged and the ones that shouldn't be really be playing as big boy football as they appear to be doing. However,
mm.
obviously, it's a different kettle of fish when um, big shops go pop. I don't think any of those are going to go pop at the moment. I'm not hearing any rumors at all, but don't be surprised if you hear like smaller, outfits are, going to have to start kind of deleveraging and literally just cutting out and basically saying, right, we've had a good laugh, but yeah, now we're out.
Yeah, no, I agree with that. And I think the way that I would kind of frame market developments more broadly right now is, if you look back, we are. I know it feels like about a decade ago, but we are only a week on from Liberation Day and those tariff announcements last Wednesday. I think the initial reaction to that was the shock. Holy shit, these are a lot bigger and coming a lot quicker than we'd expected. We then moved into the sort of panic phase, probably on Friday and also a little bit on Monday, where participants are going, actually, this is going to cause a huge hit to growth. This
Yeah,
is going to cause a massive rise in inflation, etc., etc., etc. I think the point we're probably starting to get to, and maybe kind of got to overnight, is that we've had 4.5 days of really high realized cross asset volatility. And we're now getting to the point where things under the surface are starting to creak a little bit.
yeah, and this is it,
And I
and
think
it's
that's
those
kind of the
moments. Yeah,
yeah, and I don't want to say I told you so, but I did write this in my note on Monday morning that that is the point where we really get into the kind of unknown of what the hell is actually under the surface and what is creaking, and also
yeah,
how does that end up resolving itself. So yeah, I think we've gone from this is still clearly a trade story. This is still clearly a fiscal policy narrative. But I think we've gone from the point of oh, everyone's worried about tariffs to actually this is now more of a sort of structural
yeah, and
issue
also
potentially.
it doesn't help that the story is still very much like with. apart from the Sky News doing the New York opening bell, which
Oh
is
yeah,
usually a sentiment gauge for the worst being over, but I'm not sure it really is because at the moment, especially, every day it seems like the the murmurs from the White House are getting louder about who hates who and so's an idiot, and it just feels like it's very fractured in the White House itself at the moment. Again,
yeah.
depends who gets tinned, depends how the market reacts, right? So it'd be an interesting one. Yeah, I think there's still lots of volatility to come,
Oh,
um,
absolutely.
but it does feel to me famous last words that at least we're starting to see every day now headlines about so and this country, this bloc, this trading bloc, this country is starting to come to come to President Trump with options. So
Yes.
potentially the worst of the tariff, if we're going to focus on the tariff side, the worst of that might be over. But as you said, the markets have put some serious fractures in. It's getting very creaky, and the White House itself, Trump's inner circle, definitely aren't harmonious at the moment. So we could be getting some headline risk on that front.
Yeah, absolutely. Let's move on to that then. Actually,
Yeah,
just in
sorry, go
terms of
on.
some of the sort of fundamental developments on the trade front yesterday. Of course, the usual disclaimer: if you're listening to this back later, then it will all have changed. In terms of the actual policy, of course, it is worth just noting that the reciprocal tariffs did indeed go into effect at 1 minute past midnight on the east coast of the United States, as had been previously announced. So that means that the tariff on goods imported from China is now a baseline 104%, and all of the other tariffs are as Trump announced with that stupidly large poster this time last week. In terms of comments from the Trump administration yesterday, as you rightly said, Ryan, the messaging does seem to have changed slightly to focus much more on the prospect of deal making. We heard from both President Trump himself and Treasury Secretary Scott Bessent yesterday saying that as many as 70 countries have called the president and asked to negotiate with the United States, with Bessent stressing that those calls and those negotiations, let me start that again. Bessent stressing that those negotiations are a result of the calls that have been made and not the market reaction that we have seen. Nevertheless, Trump stressing that they are apparently doing well on the idea of tailored and country by country tariff deals, while also noting that both Japan and South Korea are on their way to the United States in order to get these negotiations underway. And according to Besant, Trump will himself be personally involved in those negotiations. That is just something worth bearing in mind. Firstly, obviously, the talks with Japan, the talks with South Korea, are they going to be a kind of blueprint that other nations can use to get the tariffs off on their countries? But the second thing is, I mean, if these are going to genuinely be country by country, that's not going to be a particularly quick process. There are
No.
only so many people working in the Commerce Department, working in the Treasury Department. I mean, there's only so much bandwidth that Trump himself has to go and meet all of these people. You're not going to get 70 trade deals done in the space of a week.
No, but
That's just simply not going to
what I
happen.
would say is that the important countries are going to get seen first, which is kind of what
Yes.
matters to markets, and also what matters to markets as well is just knowing that they are talking. So it's not like markets are going to hold fire until the ink is dry. I
No.
think just knowing that they are in talks or knowing that someone's flying to the White House. I think we've already heard that South Korea, Japan are already heading that way. Obviously, Maloney from Italy, so you could consider that the entirety of the EU are playing their Maloney card because they know that she gets on with Trump and Musk. Um, yeah, so I kind of disagree slightly that that matters less. Maybe from an economic standpoint, it matters more, but from a trading point of view, I think how long it takes for it to pass through the right departments is less important than knowing that Trump is happy with what they've said.
Yeah, no, I would agree. There is a macro and market
That's the
distinction
difference
to
between
be
an
drawn
analyst
between that.
and a punter, I think.
Well, that's why I'm here, mate. The other thing just worth bearing in mind is we have heard from the Chinese side this morning. I think there's a couple of, probably three things worth bearing in mind here. The first is that China has not immediately retaliated with tariffs of their own. I think the 34% that they mentioned previously is actually due to go into effect tomorrow, but they haven't announced anything on top of that as of yet. The other thing that they haven't done is a massive devaluation of the renminbi. The fixing was pretty much a non-event overnight, whereas some expected that to be quite a significant risk. That did not turn out to be the case. We have also this morning had the release of a white paper from the Chinese administration. Now, this has given risk assets a little bit of a fillip, and actually, as I speak, the S&P future trading to fresh session highs, up by about 0.5% on the day now. The main sort of headline that everyone's drawn out of this white paper is that the Chinese have urged a dialogue with the United States in order to resolve the ongoing trade disputes. It is worth noting, though, that the rest of that white paper sticks to the relatively punchy rhetoric that we've heard from the Chinese quite a lot of late, reiterating that they will fight to the end on tariffs, will take steps to defend their rights. They won't allow anyone else to deprive China of their right to development. They won't accept the US pressuring them. They oppose bullying and restrictive measures, and that they will resolutely counteract any measures that are imposed on them. So I think that headline has clearly given markets and sentiment a little bit of a boost. But it is worth bearing in mind that the remainder of that white paper is very much in keeping with the messaging that we have heard
Yeah.
from China of late. And of course, the big sort of headline that everyone's waiting for is Trump has picked up the phone and spoken to Xi, and that hasn't happened yet. So do just bear that in mind, of course, as well. In terms of other bits and bobs worth mentioning from yesterday, well, as you rightly said, Ryan, there do seem to be increasing signs of disagreement within the Trump administration. I think it's very telling that we haven't heard from Howard Lutnick all week. I think he's been very much sort of sidelined at this moment in time, definitely being prepared as the fall guy. The Wall Street Journal, the latest one to run a bit of a hit piece on him yesterday.
What was
And
it Elon Musk called him yesterday?
well, no, I'll get on to that in a second.
Okay.
The journal in this piece, apparently Trump has been asking, why is this Howard guy at the White House so much? So yeah, his days might be numbered. Elon Musk, his comments were actually in relation to Peter Navarro, who
Oh,
is
shite.
Trump's sort of main trade advisor. And I mean, of all the things Musk has ever said, this is probably what I agree with him on the most. He said, Peter Navarro is, and I quote here, truly a moron that is dumber than a sack of bricks, which, if you've ever heard Peter Navarro speak, you would absolutely agree with. But
To be
nonetheless, it
fair,
does.
I think this is very unfair on bricks.
Yeah, I think it is actually. To be honest, we are being a bit unkind to them, but
Sorry to
it
any
does.
brick listeners that are out there.
Yeah, if you're a hod carrier, then sorry.
Oh,
If
oh, niche as fuck. I love it.
um, This does, though, speak to what does seem to be simmering disagreement within the Trump administration. Perhaps unsurprising, given the turmoil that their policies have unleashed, both economically and in financial markets. But nonetheless, it is certainly something to keep an eye on. In terms of other bits and bobs from yesterday, because there is news going on outside of trade, although it is obviously being drowned out at the moment. One interesting report sticking with the United States is that apparently President Trump, according to reporting via Semaphore, expressed an openness to raising tax rates on the highest earners when he met with GOP senators last week. This is in keeping with other recent reporting that essentially is along the lines of the bill to extend Trump's tax cuts might include a tax hike, or essentially a non-extension of those cuts on the highest earners, in order to allow for more populist tax measures such as no tax on tips and all this kind of
Yeah,
thing. So
but
certainly
this
one to
is
keep an
kind
eye on.
of this is to appease because there's obviously a few in the GOP, the GOP, that are against this hard line on tariffs. So I think this is just kind of a little
Mm.
bit of a, a little bit of a little peace kind of offering from Trump and saying, look, okay, well, what can I do for you to kind of back me on the tariff things? Because he's definitely not backing down, right?
No, absolutely not. Other two other things from me this morning before I hand back to you, Ryan. Firstly, German TV yesterday, they were reporting that the CDU, CSU, and SPD have apparently reached a agreement on a governing coalition. That has not been confirmed by the Germans themselves, but of course they were aiming to get that done by Easter, and in true German efficiency style, it does seem like they are going to do that. And last but by no means least, just to give folk listening in the UK who've been around for a little while a bit of a chuckle, we heard from the Bank of England, former Bank of England policymaker Danny Blanchflower yesterday, who
of
reckons the BOE need to do an emergency 50 basis point rate
course
cut,
he does.
which is just complete and utter nonsense. I mean, what a
Oh
spanner he
God,
is.
what a guy! What a guy! Oh. Reminder: anyone wants to know a good story, ask him about him in the pub. Um,
But don't tell Dario that we've told you.
don't tell Dario that we told you. Oh, sorry, Dario, if you're listening. That was Michael that said that. He's the one that's thrown you under the bus. But anyway, right. Cool. Is that you done for the time being?
For the moment, yes.
Perfect. Wonderbug. So yes, just some few headlines via the overnight news roundup. Do check that out. It's via our pin tweet. It's also our Substack. Zach puts together all the important headlines that you might have missed overnight. It's definitely something you need to be following. It needs to be the first thing you read in the morning, in my opinion, or I say first thing when we put it out there, which is normally about 8 o'clock ish. So starting off on just some headlines on the Trump tariffs and global fallout. Obviously, massive tariffs as of Wednesday. Reciprocal tariffs apply widely. China faces up to 104%, while other countries scramble to handle the shock. Currency manipulation. Trump accuses China of offsetting tariffs by weakening the yuan. Tariff logic. The president claims $2 billion per day in revenue, eyeing big moves on pharmaceuticals next. So one for the pharma names. Some worry these measures are permanent, but Trump hints at negotiation if others make phenomenal concessions, phenomenal being the quote there. Reverberations, US goods have 10% baseline tariffs from many countries since Saturday, but certain major partners like China have far higher rates. On the broader market impact and macro views, Asian sell-off, obviously, you have the Hang Seng Nikkei, the tax hammered overnight, though China's stocks outperformed thanks to rumours national team buying. That's their version of the plunge protection team, and possible new stimulus on the cards. So look for triple R cuts from China. Bond market, a surprising across the curve sell-off, as Michael was alluding to earlier on, in Treasuries is raising alarms about the basis trade and calls for a possible policy intervention. Dollar dip. Despite the risk off sentiment, the dollar fell to rally, boosting havens like the Swiss franc and the yuan. Analysts' warnings. Goldman's projecting big hit to Chinese GDP, where they make their numbers up anyway, and from new tariffs.
Who, Goldman or China?
Well, do you know what, the fact I had to take a breath to think about the answers kind of sums that up, I think. J.P. Morgan, Piper Sandler, they see inflationary pressures and potential for slower global growth, particularly in manufacturing chains. Well, I think me and Michael could have told you that. Um, Trade talk negotiations. Treasury Secretary Bezant quietly urges Trump to soften his rhetoric. Again, this comes into what we were saying before about it seems like people are starting to try and lean on Trump internally. Elon Musk pleas against tariffs fell flat. We heard over the weekend that he was kind of really pushing for Trump to drop the many of the ones that would in fact impact Tesla specifically. Meanwhile, top officials at the White House indicate these are national emergency measures, not simply negotiation levers. Uh,
I
Go on.
Sorry, I was just
Yeah,
going
go
to
on.
jump in very quickly on that. I saw that rhetoric yesterday. I mean, clearly there's a lot of sort of populist nonsense in it, but I also wonder whether that's kind of become a line to take because the way that they've been enacted legally is via declaring a
Yes.
national
Oh, yeah.
emergency. So if you
Yeah.
say, nah, it's not an emergency, it's just a negotiating tool, then someone's throwing a court case at you.
Yeah, no, exactly that, exactly that, and it's similar to what we saw yesterday. So I just a bit off topic, well, kind of off topic. It's what we saw yesterday with the executive order. Trump's now pushing for more coal use, and he's
Mm.
put, straight away. He also labelled coal as a critical mineral and a national kind of emergency on that front for exactly the
No,
same
no,
reason.
no, Brian, you can't just call it coal. Did you not hear Trump last night?
Oh, what do we call it? What do we call it?
Well, if you say the word coal, you've got to
Yeah.
say the words clean and beautiful
Oh,
before it.
sorry.
It's
That
clean and beautiful
sorry,
coal.
sorry. Send me back down the mine. That clean and beautiful coal. Okay, yeah.
Do they
So
still
anyway, so
send kids down mines?
well, they do back in Somerset. But anyway, moving on. That's where I grew up, down with the pit ponies.
That explains a
Anyway,
hell of a lot.
yeah, tell me about it. International developments. Japan. Finance Minister Kato says discussions may cover FX, but Japan won't weaponize its treasury holdings. That's normally a bad sign when they start saying stuff like that. Economy Minister Akazawa to lead talks with the US. Yeah, don't ask me to say that again. EU, some countries want targeted retaliation, some want broader measures, and Spain pushes for a pivot to China. Obviously, we've also heard from, speaking of the EU, that Maloney's flying over. I believe maybe even today she's flying over. Taiwan, South Korea, Vietnam, Thailand are each seeking ways to offset the US tariffs through energy deals or new negotiations. We did mention yesterday that APAC countries buying US LNG would be a very low hanging fruit
Mm.
for them to get hold of and kind of reduce the deficit and that stuff. So it looks like that's where we're going to look. And again, as we said yesterday, no investment advice, but potentially anyone, companies involved in the production, the storage, and the shipping of nat gas that then becomes LNG, possibly winners out of all of this. Canada, India, Indonesia are scrambling to handle the new duties. Looking for some pushback on that. Everyone loves a good pushback story. Global macro and policy moves. Global rate outlook. China may relax borrowing constraints and step up stimulus to counter tariff hits. Sorry. Japan's yields see wild swings, prompting an emergency meeting of the MOF and the FSA and the BOJ. The Royal Bank and Reserve Bank of New Zealand, sorry, cut rates by
Oh.
25 basis points, sees further downside risk. India's RBI also cut rates to 6% on growth fears.
Just,
Consumer
just
and
to,
yeah, go
sorry, I
on.
was just
No, go on.
before anyone starts running away with themselves on that one. They were scheduled meetings. They're not
Yeah,
emergency
sorry. Yeah,
interventions or anything
yeah,
like
yeah, yeah.
that. These have been in the diary for a long time.
Yeah, exactly that. Consumer and corporate executives say tariff uncertainties is killing big investment plans. We've also already seen a load of IPOs being knocked on the head or paused for the time being. Automakers are holding back shipments that are traveling to the US, awaiting clarity on how when their cars get delivered, how they're going to be handled. The US households face rising costs for apparel, furniture, electronics, as reliance on tariff hit imports is quote large. I would say very large. Some geopolitical headlines. US defense budget. Trump and Hegseth vow a 1 trillion defense proposal. We heard about this a little bit yesterday. Uh, China and Cambodia naval drills, more signs of Beijing's regional military reach. There's concerns from the West that these ongoing China Cambodia drills are a sign that China may soon be having a blue water port in naval port based in Cambodia. So one to keep an eye on the geopolitical side. Iran, they say indirect diplomatic steps continue. This is obviously the nuclear deal. Trump warns of a quote, great danger if nuclear talks fail. Obviously, we also heard that Putin wants to be the lead negotiator in this between the US and Iran, so that'd be a bit of a turn up for the books. EU concerns grow about how to maintain unity amid that word that I can never pronounce. Aggressive trade measures. Now, some just before I wrap up, some corporate and market wrap news. Apple, US customers rush to upgrade iPhones, anticipating tariff-related price hikes. Broadcom, they've gone forward with going forward with their $10 billion buyback. Stocks up on that. US Steel, national security planning, re-examining the Nippon Steel's bid. Infineon, I mentioned that yesterday, so I won't cover that again. And Sheen, Beijing is really starting to push back to relocate manufacturing from China. And that's it from me. Back to you in the studio.
Good stuff. Thank you, Ryan. Just worth bearing in mind that we have, as you alluded to, the Japan meetings that were going on. We are just starting to get some comments out of those meetings. Mimura, who I believe is the finance chap over in Tokyo, he has said that it is important that foreign exchange moves stably, reflecting fundamentals, and that he is watching FX moves with deep concern. For those who are unfamiliar with how Japan tend to talk about the yen, that's basically Japan going to the market. You're going a little bit quick, a little bit too far, a little bit too quickly here, and just a reminder that they will step in if they get overly worried about that. But I think we are still some way off that at the moment, so do just bear that in mind. In terms of today, then, a few bits and bobs worth watching on the calendar, which I'll get to momentarily. But of course, the main focus will remain on tariff and trade-related developments, particularly any comments that we get from the Trump administration, and also any comments that we get in terms of either retaliation or, of course, in terms of deals being struck to take those tariffs off. In terms of the calendar, though, things to watch, I reckon there's probably three today in no particular order. We do have further Treasury supply out of the United States. We have a 10-year auction due at 6 o'clock this evening. Kind of scary as to where that might go, given how high yields have moved and also given how poorly received the 3-year sale was yesterday. So even if you are not a Treasury participant or you don't tend to watch auctions particularly closely, I'd book out 10 minutes in your diary to be at your desk later on when that sale
Yeah,
goes
definitely.
off. Also, today we have minutes due from the March FOMC meeting at 7 o'clock this evening. Of course, these minutes are somewhat
Oh,
stale and
massively.
they are from before the tariffs were announced. But do remember that the Fed craft the minutes after the meeting. So they may show further deliberations, at least, as to how the Fed are viewing tariffs and any appropriate policy response. Of course, do just remember that at the March meeting, the Fed funds rate was kept unchanged, and the dots pointed to a median of 50 basis points of cuts both this year and next, also being unrevised. And last but by no means least, we do have earnings due before the open today from Delta Airlines, ticker DAL. Again, just one to watch. Of course, Q1 earnings season kind of gets underway properly on Friday with the banks, but it is nonetheless worth just keeping an eye on them, because it will be probably the first major corporate to report since all of the tariff nonsense, and particularly the commentary around how consumers, well, firstly, how consumers are viewing the outlook now in terms of spending, but also freight, air freight. What impact is that going to have on Delta's business as tariffs are thrown around all over the place? So, one to watch there. And also, obviously, comments from the Trump administration, as I just mentioned. President Trump is due to be signing executive orders at 2:30 Eastern time, 7:30 this evening London time. It is closed press, but Trump is Trump, so we'll probably get some comments from that nonetheless. And for the moment, that is all from me.
Awesome. Thank you so much, Mr. Michael Brown. Listeners, thank you so much for tuning in, especially our regular ones. We really appreciate you. Zach, big shout out to you for obviously the overnight news
Oh,
roundup. Oh, Michael Brown's just fallen off his chair. Also, big shout out to Cam and
I
oh,
actually
really?
have.
Big shout out to Cam and Angie, who are be doing the crypto blast and the grain market blast with later on today. Listeners, if you are trading today, as always, try and keep it tight. And yeah, stay safe, and we'll see you all tomorrow. Goodbye.
Indeed. Bye for now.